Good morning. We'll get a kind of a slow roll transition start here, but I think that more people will be coming as people get coffee, get breakfast, get past some of 95 traffic, and so on. So just as a couple of quick show of hands, but first I'll introduce myself. My name is Lance Fogtman. I work in product management and strategy for ION, specifically ION Commodities. I have been doing technology for commodities since the middle 90s. Started with Shell in the Gulf Coast, Deer Park. So I'm kind of that old oil guy that has transitioned into basically any bulk commodity. And so that's where my specialty is primarily liquids, but also the bulk commodities. So if you start to ask me about power and that kind of stuff, I'm going to get glazed over eyes, and it's just not going to work, right? But if you can put it on a boat, we can talk, okay? There's a few of us that drive a lot of our metals strategy and our metal solutions for ION Commodities. It's an investment area that we've been growing quite heavily. So a couple of quick, I've done my hand up, what I am. Just a couple of quick hands. Who's from local versus who came from, when I say local, like inside of 50 miles? Okay, and obviously then the not local would be, okay, roughly, okay. So, all right, so 30-70, we'll call it, right? 30%, 70%. How about another quick one? So I'll raise my hand on this one. I often say that I sit on the sell side versus the buy side, meaning I sell versus I buy. And to be very clear, that is not I sell ores, feedstocks, refined products, finished materials, fabricated metals, whatever, or anything in between. We as ION sell technology solutions and the advice to be able to set up your particular businesses and help them with risk management, operations, trading, etc. Okay? So when I say who's on the buy side versus the sell side, so who in here is on the industry side, on the buy side, versus, so who's on the buy side? Okay, great. And then when we say on the sell side, more of the technical folks and the vendors and so forth. Okay, great. All right, so we're going to talk a little bit about the metals market. And again, because I sit on the sell side, I'm not trading every day, but the perspective that we have is secondary, but it's actually quite good. And the reason being is ION is the largest provider of solutions to the commodities industry, which means, and I always say that this way, it's not really a good metals analogy, but you're going to get it, that we have about 60 million barrels of oil booked in our systems every day, okay? Physical barrels, okay? Which you get the point is well over half of the physical oil traded. I wouldn't say that we're there at that percentage on the metals and other bulks perspective, but we also have the dominant position on a pure market share basis. So what that means is that we have insight into a very large spectrum of customers that trade every commodity known. And so it gives us some unique insight. We're in a position to have thousands of customers and be able to see across that and understand what's going on. So I'm not speaking to you as I trade, I operate, and so forth. I'm speaking to you as I see a bunch of our customers that do, and we keep close tabs and try to work with them to make sure their solutions are good. And they explain some of the challenges that they have, and we offer the solutions to our best. So some of the market things that we're seeing. So we already spoke to this yesterday in a panel, in a couple of different panels. But what we'll do is provide us a quick industry update, a little bit on circular, critical, supply chain, visibility, and ion positioning. So there's a couple of longer-term current trends that we see in the industry, but let's talk about near-term, and we'll just recap a little bit of what you probably heard yesterday. Tariffs are really at the forefront of a lot of the discussion. We also basically see a sensible reproach to some of that, but based off of what we're hearing, we also see probably, very likely, some, we'll call it protectionist for domestic metals. Specifically, we believe in like what we're hearing in aluminum and steel. We domestically, we do not believe that that there's a strong. We believe that they're going to speak, but not have strong movements on critical metals or critical minerals, and so it'll be more of the heavier duty, the cobalt, nickel, and so forth. And you can see that. Some of it is real, some of it's not. If you think about, the probably the hyperbole is we're going to basically annex Denmark because they have a lot of resources. Think about that, right? Is that right? Or deep sea drilling or mining, I should say. The fact is that there are leases being offered to actually just Canadian firms. But the point being, there are some things happening that kind of speak to some interesting, but we're basically seeing from customers and from talking to the industry that the near term is more of near-term trade flow changes. So specifically, people either stocking up or trying to sell quickly, depending on their position on things such as tariffs or the wars, whether it be a Putin or the more recent Middle East conflicts. So, and then what we're also seeing near term, which we believe is more of a long-term impact, is Middle East growth. So I'll ask it this way. Who in here has been to the Middle East more times in the last, let's say, 5 years than you did in the prior 20? I'll raise my hand. Okay. All right. So I was thinking it'd be a little bit more, but maybe it's just the audience distribution. But I'll just say it this way. We've seen a massive growth, and it's not just oil companies or oil-based commodity growth in the Middle East. So there's a couple different factors for that. One, the Middle East is, so from an ag's perspective, they're trying to get more food supply security. That's a different point. Financing. There's obviously, since Putin rolled in Feb 22, there's different trade flows due to sanctions and so forth, and different means to be able to actually finance some of those trade flows. Then there's also just near proximity to some of the heavy production basins, as well as some of the processing and tolling that are heavy in the Middle East, right? So the Middle East is becoming kind of a little bit of, Singapore's not losing its luster, but certainly losing some of that share, right? And as well as a lot of the big banks kind of jumped out of trade finance, in some cases out of Singapore, and so a lot of that share has moved to very large family offices and alternative investments or alternative finance, as well as classic trade finance out of Abu Dhabi, Dubai, and the likes. So that's what we're seeing, as well as PIFs and so forth, right? So those are some of the near term. Some of the long term that we think about are obviously right up here. Sustainability, like Danielle said yesterday, I don't know if you got to meet her or hear her she's Gerald's head of sustainability. It needs to not be a check-the-box exercise, but what we see as, again, kind of a technologist perspective on the sustainability is it's a very complex technology problem as well as a business problem, right? So we need to be able to find value in it. We need to not just check the box. Circular economy. We've actually seen a massive growth in existing customers moving more into recycled space, as well as some of the newer customers that are some of the world's largest recyclers, regardless of the actual type of metal that they're recycling. So, and we've seen some new technologies that have enabled us to, obviously, as well as getting cores and so forth out of battery metals and so forth, being able to get into the PGMs and get that recycled out. So we're seeing a lot of movement in that area. On the critical minerals, again, we don't see, honestly, that much from a technologist vendor perspective as far as people adopting and using our solutions. So that generally speaks to either one, there are smaller firms that don't capture that, so they're just managing that in Excel, if you will, or two, that there's not that much growth, or not that much growth that we see. Okay, but that doesn't mean there isn't. It's just not keeping up with the growth that we're seeing in the classic refined space, conch space, and other ores. What we are seeing is more alloys and different types of ores. So people are not just capturing just copper and lead conchs and just refined copper and just PGMs and precious. We're starting to see a myriad of different products in use or fabricated products. So we're seeing more across the supply chain as far as the types of products, not just the classics. So that's very interesting, which means that overall our customers are getting more sophisticated as what they're capturing in systems. So we're seeing that. Again, on the critical metals, from a domestic perspective, the U.S. in 2023, I think, imported 190 million of critical minerals that they deem. So if you do the math, 190 million is just a drop in the bucket. It's not a check I would want to write or could. But the point is, it's not much. So we'll find a way, if that price gets jacked up, to either find entrepreneurs who can figure out how to make the deal better, or engineers that will find alternatives. For that is kind of our perspective. Plus, that landscape from a technology is constantly evolving. But it doesn't mean that we shouldn't, and I believe that administration and policy are doing things to try to sort of secure but not heavily fund any of that actual production. So those are some of the long terms. We talked about recycling. The other thing that we're seeing from an industry, I mean, this is across all commodities, but it's especially true in metals. So we in the commodities overall space, I don't know if any of you read Jeffrey Moore. He talks about this technology adoption, and there's leaders and laggards as far as people that adopt technology and who adopts it first and so forth. But we see basically certain commodity classes that are fast adopters versus the slower adopters. So the metals is coming along now, the entire metal space. And so what that means is we have firms that are not just trying to capture a contract and capture a position and be done. We have more firms that are wanting to capture every element of their business, from even optimization of the portfolio and trying to do pre-trade analytics and trying to understand what if I do this or that or the other, down through how I finance my trades, how I do the entire supply chain down to every last truck of offtake out of the DRC, going, up to get to DAR-S, or going down through like Zim-Zam to get to DAR-S, right? So really complex, transloading, put it into a container in DAR-S, putting it on a vessel, sending it to somewhere to get tolled and processed, and then, selling forward the refined. So in the past, it's been very spotty on what our customers use. So bottom line, the industry, are getting more complex. Not from a perspective of what you normally do, but what you do in systems. So you're asking more of us, and hopefully we're delivering more for you. I know that we are in some circumstances, and we see that continuing. So this covers really across all commodity space. We're seeing that trend, that it's not getting, what you're asking of solution providers is more complex. We want to handle everything, including, some of our solutions to connect to banks, some of our solutions to connect directly to the markets, some of our solutions to connect directly to the brokers that use other ion market software to be able to have a tight coupling and tight integration of an overall solution. So those are the kinds of things that we're getting asked in the past few years, and so we see it overall a highly complex industry. So that's what we're seeing. And the other thing that we're seeing is, this kind of leads into that complexity, is our customers are basically saying, I want to see every element. I want to be able to see my business visibly in a solution at a high level, drill down into detail, and to understand from an economic perspective, from a physical, where are every single ounce or ton of my materials, and what are they doing? How am I paying for this? When am I getting paid? What is my exposure? And so on. So all of this visibility and complexity leads to us needing to take a step up and deliver better solutions to you. So I want to pause there for a moment and just see if there's any questions, because I've talked too much, and frankly, we want to get you talking because you're more interesting than me. So any thoughts or questions? Anyone? Small room, you can just speak up. Thoughts? Okay. All right. So I'll peg a few questions here in just a moment. So our solutions are built to manage every step in the workflow, from the inception of trying to get a contract between counterparts, to how you go and finance that, how you forecast your supply chain, how you actually plan delivery, how you manage processing, how you manage, actual delivery, how you work with your freight desk, or you work with trucking companies, or you work with rail companies, or working with the terminals and container operators and sealing services, and every element of the operations and traffic space that we manage. So through to obviously the cash, right? And then managing your cash flow risk or your fair value risk from a hedging perspective. So every element of the workflow or the trade life cycle, we manage. And so is anyone struggling with any of these particular areas? Don't be shy. We haven't had enough coffee. We got to get y'all bouncing. Who's struggling with any of these areas? Anyone? Okay. All right. So let me ask it a different way. For those of you that are capturing contracts, well, let's ask it a different way. Who puts in trades or contracts into a system versus types it into Word, puts a PDF together, and keeps an Excel file? So if you're in that first camp and you put it into a system, raise your hand. Okay? If you're in the second, you kind of do something more manual with spreadsheets and Word and so forth, raise your hand. Okay. So half and half and a little less participation, but that's fine. Okay. So, there's reasons people, and we also understand that we have customers that do both, right? Frankly speaking, it's very difficult for us to get spreadsheets away from the front office because they're always going to have their own. The traders are going to have their own book and keep a side book if they know where they stand without a system. So we understand that. But the point being, what we're looking to do is, is one of our stated goals to remove Excel from the core? Yes. Is it a reasonable goal? That's debatable. But the point is, that's our stated goal, is to never have any core official data in Excel. And so that's kind of what we're looking to do, and to basically be able to automate that. Now, as we move through, some of the things that we're doing that's more interesting and what we're looking from a forward view is more automation. And so what this does is it basically says, right now I run the traffic for the conch desk, and, I have to put in, on average, 5 different assays for every truck or every lot that we move, right? And I have to have 2 or 3 people help us do that all the time. Well, if you're like some of our sophisticated customers who have some of this integrated, they can do that with a half of an FTE that just checks to make sure the data's valid, right? So what does that mean? What that means is we're simply using automation to allow you to do more high-value tasks, right? So rather than you doing tedious data entry of assays, COAs, actual volumes, and so on, we're able to deliver solutions that take care of all of that take care of assay finalization, that take care of the umpiring rules, that do all of that kind of tedious work that you may or may not be doing right now. And I'm kind of picking on conchs because it's probably the hardest of the different metal solutions to manage from a system perspective. Real-time data monitoring, that's kind of obvious. You need a single source to be able to see everything across your business. But real-time is what's more important here, okay? So in many solutions across the space, real-time is not a real concept, but we have solutions that absolutely are real-time. So that's important. We mentioned the complexity of the landscapes. So what we're seeing also is this big technology landscape complexity, meaning it used to be that we would walk into a reasonably large customer that had 3 or 4 desks, maybe 6 desks, something like that, and that we would have to do some technical integration work with a few systems. And now it seems like it went from 3 or 4 systems that have to be integrated to a dozen. So it's becoming more complex, which means that you really, really, really need to be advised and understand how to make sure that you have an enterprise view of that overall landscape and how those systems will work together, because they will adversely affect your business processes and cause rigidity and constraints on what you can do from a process perspective unless you get that integration correct. We've talked about circular and ESG. We support them well. We have multiple customers that do recycling and different forms of recycling. We have multiple customers that are also using our solutions to manage their sustainability. So things like CBAM, I know that this is the US, so you may not, but you could argue that the US doesn't have an ETS like Europe does, but it should soon. There's going to be different perspectives on when that will happen, but border adjustments and so forth are impactful, especially if you have business on the other side. But will it happen domestically? I don't know. That's something that we're not the experts on to be able to say. But the point is, we have the solutions to manage your sustainable footprint, to be able to understand what your obligations are for different reasons, and to be able to understand. It's also important to be able to see what those border adjustment numbers look like, to be able to understand how you're competitive in different markets, right? So the cost of the CBAM certificates is going to be kind of interesting whenever you start to look at that and compare delivered metal into Europe or elsewhere versus that. So let's talk a little bit more about our solution. So I want to pop this particular slide up to show, and I'll give a brief history. We have a few different solutions in the Ion product portfolio that cover the metal space. We have one primary solution from what we call a classic CTRM, Commodity Trading Risk Management solution. We have two CTRM that kind of focus on the metal space, one primary and another that focuses more on financial trading and kind of the precious and refined space. And then we also have a couple of other products that are more operational, or we have a product that basically does your metallurgical accounting. So it's definitely heavily used with like a smelter or an actual mine, as well as something that we call pit to port, that basically manage the heavy logistics from the mine to the port. And it's especially useful, and it may not be quite applicable in the coal, heavily used in iron ore, and some copper and so forth around the world, and all of the big names, Rio, Glencore, et cetera, et cetera. So, and then this is kind of our arc of what we've been doing. So our primary solution was born out of Trafigura. Okay, so anyone from Traf here? Okay, fine. So our primary solution was born in Trafigura 25 years ago as an oil solution. It was adapted, I should say, in about 2008, 2009 to start doing base metals and coal. And you can kind of see that this arc of build that ultimately built out the rest of the metal space. And so now Ion has the largest share of customers in the metal space. And we've kind of grown that by adding more capabilities, which obviously expands what we can do for the different customers across the base. And we'll continue to grow. Our position in the market is substantial, as we've said, and we're also investing heavily. We have also my boss, Sunil, here, so just wanted to maybe, Sunil, can you speak to some of the kind of, I'll jump down. Here we go. What we're doing from a position, from an investment and strategy perspective in the metal space?
Sure. Well, thanks, Lance. And first of all, thank you all for choosing to spend 45 minutes or so with us this morning over breakfast. I think there's still some coffee over there, so feel free to get up and go get some. My name is Sunil Perswas. I'm the CEO of Ion Corporates. We cover our commodity management solutions and also our treasury management solutions, which is quite interesting if you're focused on trade financing and need to look at that side of the equation. Maybe to go back to where Lance started off, what are we seeing in the marketplace, and maybe synthesize it at a higher level. Energy transition used to be a big thing, uh, you know, 12 months ago maybe. And as part of that, we saw a huge drive into metals and mining to drive electrification, or industrial revolution 2.0. We saw big data morph into AI, right? More microprocessors, more rare earth metals. We've gone through, unfortunately, this geopolitical mess that has put national security at the top of every country's list. And how do we secure metals? How do we secure supply chains, whether it's coal or whether it's steel? Apparently, these are all items of national security now. This has fundamentally changed the landscape. So like I said, we operate in commodities. So we all grew up in crude and refined products. We got into energy transition, power, gas, and renewables. World population is going to 9 billion, 10, 11, 12. We've got to feed all these people. So into agriculture as well. But metals and mining is why we're here today. And, Lance put up some graphics there. I mean, you all have problems in different areas. But what we see relative to the other commodity classes is a very fragmented industry, right? It's not connected. So everybody in the room probably does various bits and pieces of the supply chain within the systems, ecosystem, shall we say. You've all got point solutions, but ask yourself, are they connected? And how many people do my companies employ that connect all these systems and move data around? And am I still dual key entering? And how much of what I do today is AI enabled? And can I even do it with the solutions that I've got? Or is now the time to really leapfrog forward and start looking at the next generation of solutions? And it's not just us. I mean, there are many others in the room next door that are looking at this as well. Because this is what we believe from our perspective an underserved market. So about 2 years ago, we sort of like recognized this pattern, and we actually broke out a vertical within Ion focused on metals and mining. Lance is sort of like giving you the backstory, giving you some details, but from our perspective, we had a whole series of solutions. We sort of like said, well, how do we connect the supply chain together? How do we connect the various internal business functions? How do we engage our customer base to bring the internal business operating processes into the 21st century to take use of data? We focused it on Aspect as our solution to do that, and Lance sort of like leads to Aspect Solutions, talked a little bit about it. We have other parts of the portfolio which might focus on metals trading and finished products, particularly precious metals, that really focus around the nuance of that business and some of the order management and exchange trading that goes on in that space. How do we bring some of that capability more directly to us? This is metals and mining. We have pit-to-port type solutions that deal with the nuance and the logistics of getting mineral ore concentrates to port, shall we say. We have assay management software. But even within our own portfolio, none of these systems talk to each other. So when Lance was up there and said, well, what are the problems you have? We see the same problems. And why do we see these same problems? Because our customer base, which is significant, all operates in a highly fractured basis. And so, our commitment to the industry is to continue to evolve and direct our systems. And we're looking for one connected ecosystem. And this isn't a matter of just integrating different products together. This is about having one sort of like source of truth of the act of commerce and the transaction, and making that available through a system of record, so that systems of engagement can then operate on top of that. So that's what's going on over at Ion. Again, thank you very much for being here today. I'll hand back to you now, Lance, but I'll certainly be around at the end for any questions.
Thank you, Sunil. So I'll try to get back over here. So thank you. We're making significant investments, as Sunil said. We had some end of the year, turn of the year meetings with our chairman of the Ion Group, and he's highly supportive of where we're going. So I'm just going to pop up a few slides. If you don't know who Ion is, really quickly, we are a global company. I think this 13,000 is actually old. I think it's closer to 14,000+. But we are a quite large fintech solution overall, our Ion Group. The corporates, which Sunil is the CEO over, is I think close to 2,000 people, ballpark. So we operate in that top left quadrant there as a couple thousand people out of the 14,000 or so from an Ion Group perspective. What does that mean? It means that Ion Group has about, I think it's 9,000 developers globally. So we're not a small software company. Hence, you can lean on, we're going to be around. The problem with commodities is, I grew up in Texas and some in West Texas, and so oil swings, people talked about it, right? 86, et cetera, et cetera. 15, 16 was interesting, right? But the point being, commodities have swings. Ion doesn't have swings because it's distributed across every asset class, so very stable. So other, firms may have issues with size and the big swings in commodities. So we really won't experience that because of the structure of the company. So Ion also brings markets, that lower left, which is very interesting, because if you think about half of the brokers that you deal with use Ion market software to run their middle and back office. So we're also working to integrate that, and we have some integrations with that, but we need to get better, as Sunil said, as a more of a systems of engagement rather than kind of point-to-point integration. And then, Sunil spoke to some of our solutions. So we have, across the top, we have our primary CTRM solutions, of which Aspect on the far right and OpenLink on the far left are kind of available from a metals perspective. They all serve different commodity spaces, so if you're here for power or nat gas or something else, they serve different areas. But the point being, and then we also spoke to complementary products, which are QMaster and Algosys are the primary. Algosys is a metallurgical accounting solution, so if that's what you need, if you need, anyway. So, and then QMaster provides the pit to port, the heavy logistics capabilities if you're operating a mine or the logistics in between there. So we have other solutions, but the point being, a very large customer base, a very solid Ion Group base, and hopefully the solution to meet some of your challenges right now. So I want to pause there and just see if there are any questions, comments, thoughts. Okay. Well, thank you all for attending. Thank you for sharing time this morning. Go get more breakfast or coffee or whatever you need to make it through the day, and thank you again.